Chongming, Anthony, Kelza. All right, good morning to you once again. All right, so without further ado, let's start our morning MAO right now. Now, MAO stands for Market Analysis and Outlook, okay? All right, okay, let's go. Okay, today is the 7th of February 2022. Today is a Monday, a fresh start of the day. And today is also Ren Ri. All right, Ren Ri, right, is the for the Chinese itself is the holiday. It's a birthday for everybody. Yeah, it's a birthday of everybody. So I wish everybody once again happy birthday. All right. Okay. Good morning to you, Liu. Good morning to you, Freddie. Good to see you, Freddie. All right. Now, is Russia getting ready? All right. Is Russia getting ready? Let's see what is Russia doing right now. Let's take a look with this one here. Okay, let's go. There we go. All right. Now, today you can see from my caption, is Russia getting ready to invade? Now, this question itself is ongoing and is one of the what do you call it, on Twitter. There's a lot of context over there itself, and of course, there's a lot of speculation, and of course now apparently U.S. troops is now lining themselves even into Germany. All right. So what is going on right now is that they are definitely getting a bit of attention over there itself. Of course, we do know that interest rate is actually moving up, going to be moving up. The inflation is going up, and of course, at the same time now we have this thing going on. So it seems like it could be just purposely done it to just spook bomb. I'm not too sure, but definitely this week itself, the CPI data will be very well. The people will be trading and look at it very closely because at the CPI data, some people feel that the CPI data will go down lower because they feel that last month, the CPI data went up to 7% was because of the used car sales added into it. So this time round may not be that high. That's why they are looking at a lower number. But of course, there's some people saying that no, number will be much higher because of the crude oil price going higher. So that is the reason why across the board, the CPI will go higher. So there's two camps on this, depending on how you see it, all right? Then of course, end of the day is, there's this Chinese saying, 姜还是老的辣, means that, right, in the older ginger is the better one. Now what happens that this Warren Buffett, all right, he has scored once again, all right, his viewership in some of the technology counter like Apple was brilliant. He avoided Facebook, and apparently Facebook really went down. So it seems that, right, the Oracle of Omaha is still having this mojo, all right, he can still really do it very well. So I'll cover it later, okay? So today's MAO is going to be very interesting because we're going to cover the third installment of the alternate market news. So let's begin. Now, disclaimer apply as usual. Do note once again, my job is to give you my best of my ability to share stuff with you. Your job is to make money from the market on your own, all right? This is very, very important. So traders, please understand that as well, all right? Please understand that. Just give me a moment. Let me just go back to my slide a bit just to do a screen capture. Just give me a moment, yeah? Don't mind. Okay, just give me a short moment. Okay, done. Okay, sorry. Okay, all right. Now, the Wall Street joke of the day today is the $30 trillion. Now, $30 trillion, how many zeros? Let's see. 3, 6, 9, 12, 13. 13 zeros. My goodness. Imagine that you put this number of zero into a bank book. I think you may need a very big bank book. So $30 trillion debt. Okay, now this is really crazy because this is the highest level America is facing, and of course this debt will be passed on to the younger generation. So undeniable, this cartoon is trying to say that, right, good luck kid, it's a past 30 trillion debt to the young people, all right? So the thing is that the Treasury Department this week reported that the total national debt of the United States of America surpassed $30 trillion for the first time in history, an amount equal to about 130% of America's yearly economic output, known as GDP. All right, 130%. Oh my goodness. Okay, so that means that really the American market is very hard. But is that going to be a reason for selling? Well, the U.S. Treasury, sorry, the U.S. national debt has been going up since day one. There's no pullback at all. So seriously, this is just only a wow. But then again, I'm not going to be half surprised to see this going to 40 trillion to 50 trillion in about 30 years time. I'm not with half surprised on this. So to me itself, this is just only a statistic to take note, but it's not to bring anything back home. All right. Okay. So on my side itself, right, let's take a look on my side here. Okay, one here. Okay, wait a minute. Okay. All right. Now, the thing is this, I expected Bitcoin to go higher on Friday, but I said that once it goes about 38,000 to 40,000, likely there will be a pullback. So it was 37,000 when I said that it will go up first because the dollar itself is likely going to be having much more downside pressure. And after that itself, right, cryptocurrency will likely move higher. So I draw upwards around, and I said about 38,000 to 40,000. That will be the peak for it, but I'm wrong. Okay, I'm wrong. Okay. What happened is this, you can see that, right, the market itself did not stop at 38,000. It did not stop at 40,000. In fact, itself, as you can see on the screen right now, the Bitcoin is now trading at 42,000. Wow. Okay. 42,000. So I was wrong. It's not every time I'm spot on. Okay. So I want to be very fair to everybody here. So because some people say, Kel, you keep on having spot on calls. Not every time. I do have my wrong calls. So even though I was right in the direction, but I suspected it will actually stop at around 40,000. So I was wrong. But FYI, just take note itself. Do note there's a slew of KCB at about 42,900, 43,200, and 43,700. These are the very important technical points that I suspect that the market may not be able to go past them. I just suspected that. So let's see whether I'm right. Let's see, okay, because the KSI at the moment now is still very red at the moment, yeah? Okay, so I was wrong, okay? I was wrong, yeah? Okay, all right, so you can do that, say Bitcoin, BTC, not spot on, okay? Okay, I can let you do that, okay? I mean, I can really, I'm not kidding you, you can key that. BTC, not spot on, you can put it there yourself, I'm fine with it, because don't mean not spot on and not spot on, what can I do, okay? So write it down there yourself if you make you happy, all right? Because some people, you know, have a lot of things to say because they feel that, right, if you're not correct, you just have to be truthful. Yes, which I did, I'm doing that. Okay, all right. Now, while BTC, I was not spot on itself, right, I'm pretty happy with my gold call. Now, my gold call itself, right, I mentioned to everybody, I said, look, gold will likely be going towards 1814 this coming 2 days, which is Friday or Monday. All right, but I did mention that because the KSI is red and it's uptick, there could be, all right, there could be a bit of pullback first, then gold will go up to 1814. So that was mentioned on Friday's video. And of course, what happened today? Let's take a look. Now, really, the market came down. As you can see, it reached 1814 perfectly on Friday. It means that it went on to 1814 perfectly, hit 1814, and then slammed down all the way to 1792 and rebounded back to 1814 again this morning. Okay, right? So I was right twice. That means that 1814, I mentioned, is a very, very important technical level, which we saw on Friday. The market, once it touches 1814, almost instantly, the market just plunged. That my friend called me and said, Kel, how the hell you know 1814? I said, it's all on the chart, right? Everything is on the chart. Everything is written there, 1814. So one is market hit 1814, the gold just plunged. You look at the way the gold plunged. Oh my goodness. More than, $20 in just a span of 45 minutes. So guys, gold, I was spot on, right? Okay, so do me a favor. If you think that I was pretty okay and decent on my gold call, please key gold spot on, yeah? Okay, now the thing is this, I'm not going to sell myself, you know, but I just feel that, right, my view and my feeling on gold is reasonable. That's why whenever people ask me for gold forecast as well, right, many people take that seriously because they realize that my gold forecast will be much, much better than many of my other forecasts. So that's why people would like to listen to what I had to share with gold. Now, maybe because my Chinese character, I realized that when I did some there's analysis on my name, apparently I'm quite okay with gold. Okay, so maybe that's the reason why my view on gold is pretty decent. Yeah, not say fantastic, just decent. Yeah, thank you very much, guys, for all the spot on calls. Thank you very much. Now, do make sure that you share this with your friends because later on itself, we have very good alternate market news. We also have a chance to win some ADA coin once again. Now, do me a little favor on the this on the 12th of February, this coming Saturday, we will have our next preview for the year. This is our second preview for the year. And my call on this is pretty simple. I believe that the stock market, the US stock market might not will, but might be coming off from the start of February 2022. Now, obviously, what's the reason? Because March itself, right, with the FOMC meeting, and based on what we saw in this BOE movement on increasing the interest rate itself, it's pretty clear that, right, this US Central Bank will likely follow. Although ECB didn't follow, but we all know that always ECB will do it after Federal Reserve. It's like I follow you, my big brother. Your big brother say increase rate, I will increase rate. Christine Lagarde herself already said that she's kind of hawkish, but she want to give a bit more time to see the whole situation here. And of course, again, she also used the same words that what the Powell is about inflation could be temporary, not transitory, but temporary. So all this itself shows that, right, everybody's just looking at America. So with the current, if this coming Thursday, if the CPI data is 7% or higher, there is a very high chance that we may even see 50 basis points. Right? To me itself, 25 basis point in March is confirmed for sure. In my opinion, it's 100%. The question is about, would it be 50 basis point? Now, all the 11 Federal Reserve chiefs, Federal Reserve officials, 4 of them are looking at 50 basis point, but the remaining ain't. But of course, if the data comes in, the food prices keep on going up, and the crude oil price goes up, and plus the tension in Ukraine, all these may actually push the potential of a 50 basis point in March itself. That's the reason why I'll share a lot of more information with you. All right. So if you are able to attend this, please join us. All right. The registration page itself is already made available on Trade with the Boys page. Okay. So you can find it there. All right. Now, there's something very important to tell you this. If you attend this coming Saturday's preview, I will share with you a very important S&P monthly chart that happened only 4 times. 4 times. The last 35 years. Okay, the last 35 years, it only happened 4 times. And apparently now, it just happened for the 5th time. Okay, apparently now. In January 2022, it happened the 5th time. So whether or not you believe that the first 4 times is a prelude to what will happen on the 5th time, or could the 5th time be the total different one, I'll leave it to you decide. But to me itself, right, I think you should really attend. So to us, our strategy has been clear, the 1-5-1-5 strategy, or what we call as a first bear, then bull strategy. I mean, at the first, we are bearish, then we are bullish for the second half of the year itself. So watch out for this, attend this preview, don't miss it, all right? Okay, so let's just do a bit of review first. So first of all, just that day itself, right, we saw the ADP numbers coming out, minus 301,000. Now the market was forecasting 200,000 positive, okay? All right, and the market came out 301. So when this thing happened, right, you see many investment banks, analysts, gurus, all calling for a negative number, including myself, because I thought that, hey, ADP is so bad, NFP can't be that good, right? So I asked you guys to do your forecast, and of course, we have this special thing itself, okay? Then, of course, what happened later on, I asked you to guess, and Andy actually got it for the initial jobless claim, right? Andy actually got it. So Andy won the initial jobless claims, all right? And of course, he won it with 29.88 ADA coin. And this is the thing here itself. Then people start to ask, oh, maybe this is all fake itself. Hey, come on, man, how am I going to get 30 of you, 40 of you to join this game and fake it, all right or not? So anyway, to me itself, these are people, you know, they are really low life. I'm not going to be bothered. But we do contact Andy, right? We did contact Andy and say that, Andy, you have actually won the gas and win, and you won 29.88. But every reply to us said that he haven't have his ADA address yet, so he'll get it for us. So yeah, you see, we really contact people. If you win, we will definitely contact you because we really want to give you the prize, regardless you're a public member or you are our own student. As long as you win it, it's all yours to keep. All right? Okay, so you can see that we are very open, very honest with our sharing. Okay, so instead itself, right? Okay, hold on a minute, there's some error here. Okay, so what happened now is this for today, right? Because there's no winner back then itself. Okay, so then we have the non-farm payroll. Obviously, in the non-farm payroll, we are expected to be the number was expected to be a negative number. but of course the non-farm payroll came out 467,000, way above the forecast. So of course, everyone from Brian to Chong Ming to King Hua and many of you, more than 40 people participated for last Friday NFP guess, but of course no one got it correct because obviously I told you right, it's gonna be crazy because the market was looking at a negative number, yet it came out a higher positive number. So none of us get it correct. So because of that, none of us get it correct. This will be snowballed, all right, to 19.88 ADA coin. Initially it was 16.88, now it will be 19.88. So we will guess today. Today we will guess because since the public is involved here as well, we will guess today. All right, I'm going to give you guys a chance to win 19.88 ADA coin. Okay, so guys, now guess because today and tomorrow there will be no much heavy data. Right, the next data is with crude oil inventories, but we have seen it been up and down for quite a while already. So that means that the core CPI data on Thursday will be highly watched, and of course the initial jobless claims will be also highly watched. So today we will guess. What do you think will be the exact number for Thursday initial jobless claim right now? Everybody, key your number right now. Right, the last number we had was 238,000. The forecast number is 228,000. So what number do you think will be? Guess it right now. Now, same thing again. If let's say if you get it, you must be precise exactly to get the price. But if let's say 2% actually have the same number, then the price will be split. All right. If 3 people, split 3 ways. 4 people, 4 ways. Okay. As simple as that. All right. I'll give you now 25 seconds now to key in your number. And of course, again, if you win it, we will like to send this with you. Right. I think we're probably the only academy that do this live and market analysis and also give out ADA coin. Now, main gist of it is because we want to really tell you that, to us, it's cryptocurrency is actually a new baby. It will be something useful, not now maybe, but in the time to come. And having some ADA coin, in our opinion itself, is as good as having some Ethereum in a way, because to us itself, right, I believe ADA coin will definitely be the next baby in the market. Yeah, but at the moment now, it's been moving around the edge of about 130 to 150. It's a pretty good range for some keeping itself. But of course, if you can go lower to 90 cents, it'd be much better. Okay, last 10 seconds, everybody. Please key your number right now. I see the variety of you are doing about 190 to 210. All right, so what is my own number? Let me give my own number. Now, initial jobless claims. Now, with so many, with the ADP, the NFP number so good itself, most likely the initial jobless claim should be pretty decent, right? But I'm just going to play the devil advocate here as well. I'm going to just play it differently, all right? I'm going to put this number now. My number is 235,000. I believe that the number will be slightly higher than expected because we have a crazy ADP number. All right, but again, is everybody guess? Let's see who will win the 19.88 ADA coins. Okay, good. Let's continue. Now, last Friday, the market was really tiring. All right, really tiring. Why do I say that? Well, because the first half an hour to so, it did move down to about down by 200 points to 300 points. Then after it bottomed out around here, 34,800, and it slowly go back to the opening price. That is where it basically goes sideways. It was lunchtime for them for about 2 hours. Then there was a sudden uprush. Now that was where we expected that the market may close up because usually Friday it closed positive, right? But incredible, the last 15 minutes or so, the selling came back in again and the market closed back flat, okay? Closed back flat to the opening price. So this tells us that, right, the market itself is no longer performing what we saw in the previous time, but almost every Friday, the market will be up. Last time itself, almost every Friday will be up because what we have is the US Federal Reserve pumping in the buying the treasuries, right? But now, as you know, February month, they will do the last round. It means the last $30 billion. Once this last 30 billion is removed from the market itself, I mean no more pumping in. I believe from March itself, right, we will see who is swimming naked, and that is where things will get very scary. Okay, so I'll share more in details later. All right, so but the thing is that the market emphasized because the week itself ended positive. Okay, so S&P rises to end best week of the year so far. Okay, fair enough. Amazon pushes NASDAQ 1.6% higher on Friday. So what we saw was that the Dow actually went down, closed down 21 points because the last 50 minutes of selling. but the NASDAQ closed 1.6% higher and S&P 500 up by 0.5%. Now for the week itself, right, S&P is up by 1.5, NASDAQ up by 2.4, and even Dow is up by 1.1. Now this is actually very different and contrasting compared to what happened during the first 2 weeks of the year. And this is just telling me itself, right, it's just more of a technical rebound. Now, of course, the main driver was Amazon. Amazon, the result was really incredible, up by 13%. All right, at one stage, up by 17%. Okay, and Snap, the one. Now, the thing is, this Snap really slapped the face of Facebook. Now, when Mark Zuckerberg was asked regarding about why Facebook shares are not doing well, the revenues are not doing that well, he gave it because it's a consensus thing that the whole entire social media itself is coming down off. But when Snap come out better earnings, it was a real slap in the face for Mark Zuckerberg. All right, so that's why people say that, no, Mark, you actually do it wrong. It's your own problem. So apparently, itself, we look back to Facebook revenue. Instagram is not getting the type of vibes as compared to TikTok recently. TikTok is really pulling themselves away from Instagram. Okay. Then of course, WhatsApp itself is not profitable. That is for sure. So because of that itself, right, the valuation of Facebook now is no longer as exciting as compared. And of course, if this and Metaverse needs about $1 billion of investment on a yearly basis, so that's going to drain some cash flow. So with all this thing involved itself, right, that's the reason why Facebook itself at the moment now is not the best time to buy. If you want to buy, I will just tell you friendly advice, give about 2-3 months. Normally, after a very bad report, the market will take about 2-3 months to recover, unless it takes 2-3 days to recover. So as if 2-3 days, it's basically the market is trying to fool you, and then after that, market pump up. If the market is really genuinely tired, fatigued, or not able to get the feel, it may stretch for 2-3 months before we can see Facebook actually bottom out. So this is very important. Yeah, so I write it down just for the sake of just sharing. Facebook may need 2 to 3 months before bottoming out. Okay, that's my view. Okay, that's my view. Disclaimer applied. Now, main thing is this. Well, my 10-year Treasury yields jump above 1.9%. Now, I've said this so many times. I think I lost it already, but never mind. It's okay. I'll bring it in right now. Now, I already tell you guys, I'm very confident to see that the yield will go past 2%. Why is that so? Because this is something that we can see. There's no other way to stop the yield from moving down or moving up itself. Okay, it's going to go up all the way. So let's take a look at the yield, shall we? Now, this is the yield, as you can see. If you look carefully, now this is a monthly chart. This thing is a monthly chart. I'll show you this monthly first. So the monthly chart itself in 2020, you notice that the yield came off because it was a pandemic time. But today itself, right, we are back to this point itself. Okay, we are back to here. So now the thing is this, back in the pandemic time, we also saw that there was the interest rate was already at the lower end. So it got nothing to do with interest rate. But now at this point here itself, at the same level, the interest rate is likely going to go higher, right? So obviously itself, right, imagine this, what will happen, right? So in a nutshell, to me itself, 2% is kind of expected. If the market really go nuts itself, right, it may go all the way to 2.8%. Now, when this happens itself, I can guarantee you this, the stock market may not be able to take it. Yeah, so that's the reason why I felt that the upside of the yield is most likely going to happen, and traders can actually consider to short the bonds because that's what they can do. Yeah, short the bonds, buy the yields. Okay. All right. So undeniable. Okay, the job report was really a stunner, and of course, there again people are saying that between 3 rate hike to 4 rate hikes to hiking in the March itself. But more important thing is this is all about Meta right now. If Meta itself is one of the FANG counter not doing well, and let's say it continue to slide right, it will drag everybody down. Yeah, it will drag. So this week, the results of the companies are not that fantastic, but just to share with you, first of all, today I don't see any big news. I may be wrong, apologize on that. But tomorrow before open, Pfizer and BP will be announcing, and I don't think their guidance will be good. Yeah, guidance means forward guidance. Yeah. Now Peloton, obviously, this company is actually heavily watched. It's not Palantir, it's Peloton. It's Peloton, right? This company is doing all the equipment. So of course, this company itself, right, is also one of the darling of the retail. So I kind of believe that, right, if this counter is going down, which I think so, it will drag the market down. Yeah. Now on Wednesday after close, with Walt Disney and Uber will be coming out data, and I also believe that the guidance won't be good. Thursday, Coca-Cola and Pepsi-Cola, they will come out some of their earnings. I think it will be reasonable. And of course, Twitter, I'm very certain to say that Twitter will have even a bigger sell-off because of they are not really monetizing their product at the moment, in my opinion. Yeah. All right, so Amazon shares saw on cloud revenue and huge gains from Rivian stake and all these things. We went through this. I'm gonna skip all this. Apologize on that. Now, recently itself, right? Many people ask, how come the stock market now can be the earnings itself can be like 20%, up 25%, 30%. Last time itself up by 5%, 10%. Already the regulation or the regulatory body will come and ask you. Now, let me explain this to you. Why? Take a look. Goldman Sachs thoughts Volatility trades netting 15% on wild earning day. So what they do is called straddle. So straddle means that, right, they buy and they sell at the same time. So what they do, let me explain this to you, okay? A popular volatility trade on Wall Street is netting historic gains as the likes of Facebook parent, Meta platform, and Spotify misfire this earnings season. Now, known as a straddle investing style, the money managers buy a bullish and a bearish option contract in the market 5 days before its report. So, and then you sell a day after the event. So if the share price move far enough for either position, the other one, they will just have to, change it off. So now this strategy itself is only meant when the market really goes big movement. So now you understand why it's all right. Recently, the earnings is all right, no matter how bad it is or how good it is at least 20%. So it's very clear that someone is basically using this straddle effect to play fun with the system itself. So if the market doesn't move as volatile, it goes sideways only, right? Then this straddle will be hit. So that's the reason why I keep on saying this, guys. Not everything is perfect. There's no perfect instrument, no perfect technique, no perfect system. You have to play with it. Yeah. So that is why you can understand why now we have 20% up, down, and stuff in the market. You can see that now the buying straddle ahead of earnings has now increased by quite a fair bit. And you can see that in 2022 Q1 itself, right? Look at it, okay? There are more and more involvement into it. So you can see the average is the one, it's a gray line, and the one average is over the last 20 over years is around here itself. So that's why you can see that this is actually happening, okay? Now let's review what happened on Friday. We come on the charts first. Let's do a quick review. Now, Friday, what we saw was pretty clear. On Friday, when the market opens, the Dow Jones, when it opened, it was below MLP, below MA 200 and MA 330. And the scary part is the day high of the day really touched the MA 200 and then fall. And when it fell, I told you, right, if it comes down, it will come down to 34,816 because that is the nearest pivot, all right, which you can see that, right? Okay, so you look at the intraday, it will be clearer. Let's take a look. Okay, so what happened? You can see that the market was sideways for most part of the day. And then you can see multiple green dots, right? What does it mean? Multiple green dot means a moving average is nearby and it has triggered around this area. So most likely it's all right. The market may choose to sell or may choose to buy. So in this case, once the market breaks below OP, we know that it could be a sell, and the market came all the way down to KTR -3 and pivot 2. Can you see that? And once it reached there itself, you notice the market just stopped there and recover. Can you see it? Yep. So that's, you understand why itself the MAs are so important, and of course you need to have it in the intraday chart to see it. Because if you use it in a daily chart itself, you may not get to know the intraday points. Yeah. Okay, so that was the Dow Jones. Let's look at the gold market. Same thing. The gold market was where I shared with you just now. The gold market is below MA 30, all right, and it went down to below MLP. And of course, when you go below the MA 200 and 1-800 itself, we know that it will go down much lower. But when the market came down, it basically stopped at about 181, stopped at about 1792. 1792 stopped there. It's very near to my 1788, and of course after that it rebounded. Okay, so 1792 seems to be a very interesting number to watch out for this gold market. Okay. All right, now the scary part of the intraday chart. Let's take a look. The market ding dong, and then it went all the way up. And once it touches the MA 30, as I mentioned to you, it couldn't go up. It came down. He tried again for the second time, and once he touches it again, it came down. So that means that the 1814 right down is a very, very strong resistance. Okay, gold 1814 is a very, very, sorry, strong. Okay, all right. And after that itself, when 2 times it hit 1814, couldn't go higher, you can see that the market just collapsed all the way. Now before it itself, right, you can see the bomb changeover. So you put the line at the high and put the line at the low. So what happened is, if you only bought here itself, it's still fine. Okay, got it? So you can see why we have the bomb at the bottom and we have to go on top. All these are very important information, yeah? Okay, so Biden's security advisor, all right, says that, right, Russia invasion will come any day now. I mean, seriously, I don't believe this, because if you want to go for a war, would you need that the whole world itself? I don't think so, right? The first thing. And of course, there's no benefit for America to get involved in this. Really got no benefit as a casualty if really they come to a point of fighting, yeah? So to me, it's all right. All these are just grapevines, and of course, you can read them, but don't get too much into it. But undeniable, it's all right. You can see that all the military powers are being showcased right now, and everybody is just waiting for the other person to press the button. Yeah. So apparently now we can't forecast the market, but they are predicting how many people will die. So apparently Ukraine could suffer as much as 5,000 to 25,000 troop casualties. Some say that it could be between 3,000 to 1,000 is from Russia, and American is at 250 to 30,000. So you can see that, right? I don't know how to make out of this, but to me, it's all right. If everybody just talk about it peacefully and then just walk off, I think we don't need to have all this problem. Yeah. Okay. All right. So if you look at the Google, if you Google this, Russia invades this Ukraine, videos and pictures, you can see that now the Russia built up 70% needed for the Ukraine invasion. And then now China is preparing full-scale invasion of Ukraine. Then of course, US say that Russia is 70% for firepower for Ukraine invasion. So basically, it's all right. Everybody got their own views about what is 70%, but undeniable, this is going to be a very scary time for all of us. As you can see that now, US is going to be very worried, and they're putting this so-called stop on this NATO thingy. And China, they will want to really see what they can do for Russia to make sure that they stand firm at the borders. And of course, there are clashes already at the UN Security Council. All right, so this is from Steve Henry. She said this: the closer to rate hikes, the louder the drums of war. So basically, he's now trying to rub it in. He says that, right, White House warns Russia invasion of Ukraine could all come any day. So that was probably 10 hours ago. And of course, now Steve picked it up and he added in on: the closer the rate hike is, the louder the drum of war. Okay, so undeniable. All right, so we have this now market analysis, the important one to take a look itself. Just a gentle reminder, our preview is coming Saturday. Please support us, bring your friends in, okay? This special monthly chart will not be released on MAOs. It will be released only during the preview. So don't miss it, yeah? Don't miss it. All right, treasury yields, as I mentioned to you, went up by 1.9%. So I'm not going to go through this, but in short itself, it's all because of the initial jobless claim that basically changes it itself. Of course, if the Bank of Federal Reserve actually do the 50 basis point, it will really shake the market quite a fair bit, yeah? Now, fresh inflation data could fuel further market volatility because of the CPI data. All right, and of course, we have all the other companies like Coca-Cola, Walt Disney, and Pfizer coming up. Now look at this in S&P chart itself, right? It doesn't look very nice because if you have one wave down, two wave down, three wave down. So in short itself, right, if there's going to be another wave down, then obviously we will not want to be bothered, yeah? Okay, take note of that. Now Warren Buffett, long-term focus pays off once again as Berkshire Hathaway presses battle platform in value. Now take a look itself. Now Apple is worth $2.8 trillion. And Microsoft is 2.2, Alphabet 1.8, Amazon 1.5. Then of course below that is the next one is Tesla at 8.99. Okay, these are top 10 most valuable companies. So next time, if you have any big recession as well, any big sell-off, then look at this company and buy some individually. I'm sure by the time the market recover, right, you should be doing pretty fine. Yeah. All right, so you can see that Berkshire, they are very good with financials and technology. They mix them together, but more important thing is this: they let them do their job. So they don't get to learn, things. They want to say, okay, we do this, you do that. Okay, I just want to figure it. Yeah. Okay. All right. So seems like Warren Buffett is still very good with his analysis. Okay, guys, so we're going to go into the alternate market news, and this is the one that you guys are waiting for. There are about 6-7 slides for you. Let's begin. Okay. Let's give me a short moment. I get some water first. Okay. Hold on. Yeah. Okay, excuse me, thank you. All right, let's do the part 3 for today. Now, first of all, it's all right. This is, okay, all these news are from some of the mainstream media that they do not really release much, or you may not see in mainstream media. Okay, for this is from Financial Times. Federal Reserve prepared to shrink $9 trillion after pandemic, okay, lashes. So the thing is this. I'm not too sure how much weight to carry on this, but to shrink 9 trillion. Now, let me give you an example. In 2018, when Federal Reserve shrink, okay, Federal Reserve shrink less than 1 trillion, the market dropped by 24%. So I don't know if the market shrink 9 trillion from the balance sheet itself, right? Do you think what will happen? I think that it's not possible. All right. So to shrink the 9 trillion, okay, not shrink 9 trillion level, sorry, my bad. It's to shrink the 9 trillion balance sheet. It's not shrink 9 trillion totally, my bad, sorry. Okay, so the thing is this, they are looking to shrink down at least 1 trillion, okay? The article is 1 trillion, my bad, yeah? So this is what happened, okay, you can take a look. Back then, the first time when in 2008 to 2009, when Federal Reserve announced the first asset purchase, straight away it went up from basically below 1 trillion to almost $2.5 trillion, okay, to 3 trillion. Then after that, they ram it up again from 2014. They ran up again from this about 2.5 trillion to 4.3 trillion dollars. Okay, now at this point itself, in 2016 to 2018, they decided to raise some interest rate, and then after that, they started to basically take some money off on the balance sheet, and that was probably less than $1 trillion, maybe about $500 billion. I can't get exact number. And what happened? Oh my goodness, the stock market came down by 24% and the repo crisis happened. Remember that? Whereby the repo interest rate went up by as high as 10% itself. And straight away, what happened in 2020 when the pandemic actually occurs too? Straight away, Federal Reserve say, okay, that's it. I'm not going to waste time. They opened the floodgate to unlimited government bond buying, and wow, from 4 trillion, it shot up all the way to 9 trillion. That's $5 trillion, okay? My goodness, 5 trillion. Okay, so the thing is this, if they are now going to tell us that they're going to do some tapering, okay, and eventually they will reduce the balance sheet, then obviously it's all right. History shows that whenever they do that, the stock market will fall. So what do you think will happen to the stock market in March onwards to probably to June? I think it's pretty outright, yeah? This is something that you must understand about this, okay? So please take note of that. This is the fact and figures of the market. Of course, you can choose not to pay attention. It's an individual choice. I leave it to you to decide. Yeah. Now you take notice this is the consumer price index for the urban consumers, and now we are now at a 7% level. And every time when the market goes up to a strong level from what you can see back in 2009, in 2002, and in 1992, every time when the numbers surge up and saw the CPI data, it will hit recession. All right, I repeat, every time when it hit the level of about probably anything above like 6% to 7%, you can see that recession is just very nearby. Okay, you can see that all these are clear mark itself. So to me itself, right, I don't think we're going to get a chance to see this back in 1980, the super CPI data. I don't think we see what happened back in 1974. So to me, so at this moment right now, if we hit around 7.5%, I believe that this may actually spike and create a recession again. Now, of course, we did have a recession in 2020, but this recession is really the shortest ever in the history of mankind. You can see that this is from 1950 all the way. Look at the size of the recession in terms of duration is actually quite visible, yeah. But the one that we cannot even see, not too sure what the hell is that, is actually a recession in period 4 months. That was how much the recession lasts, okay, how long it went. Okay, so to me it's all right. We may see 7.5%, and that will likely spook off a potential recession, not a technical recession. So traders, take note of that. Now, of course, you can see that the bond yields are moving down slowly while the yields is going up, and Federal Reserve is not even moving yet. So that means that, right, imagine now if Federal Reserve start to increase interest rate itself, right, I believe the bond price will go down even faster unless something really happens in the stock market that they feel that buying bonds is still safer. So I don't think so itself. I think that there will be a more upside on the yield, and of course the market itself, right, will have to be very careful because the stock market will likely fall. So you can see over here, this is the 2-year yields that versus the stock market. Now you notice that all along itself, okay, for the longest of time since 1998, when the government yields goes up, the stock market also goes up. When the yields comes down, the stock market came down. Okay, you see that the magnitude is not the same. So now what I'm trying to say is we are having this again. The yield is going up, right? The yield is actually going up. All right, but the SPX also going up at the same time. So this is going to be very interesting because if this is going to press higher itself, like what you saw here, then if the stock market is going to go higher, then there could be some profit taking. Yeah, this is what I meant with this yield picture. Okay, okay, this is the government yield, government bonds versus the this one is the yield, right? Yep, you can see that the movement itself is going in line. So now, but the thing is at the current moment now, it's not moving in line. Yeah, you can see that there's a big difference here itself. So now what is happening here, it seems that, right, people are getting kind of jittery right now with the market. That's the reason what's happening. Okay. All right, and of course, I think that the one that is going to be very scary and might be the catalyst of the entire NASDAQ sell-off, it will be Cathie Wood Up Innovation. Now, Up Innovation, do note the total asset under management, the peak itself was $28 billion last year, March. But 1 year later, is now at $11.63 billion. That means that there's at least $15 billion has, I mean, at the peak itself, right, have left, okay, more than that itself, right? They have left Cathie Wood, right, because they feel that, right, Cathie Wood picks are all not correct. Let me just bring you the chart here itself to see Up Innovation, quick one. Okay, now this is Up Innovation on for last week itself, right? It came down again. All right, you got a high of about 77, and then now it came back down to a low of 68 before closing at about now 72 level. So to me is, right, there should be more misery to come for this Cathie Wood. I believe that, right, there will be further selling, and my number is still the same. It's either 62 or 60 itself. All right, this is what I see it too. Okay, all right, so this is levels of what I'm going to see for Cathie Wood counter. We can see that, right, it's not moving up itself, even though market is strong, it's actually ended negative. So that means that there should be more selling to come, right? So if Cathie Wood shares go down to, I mean, the ETF go to 62 to 60 itself, right, it might be a good time to look at some buying, yeah. Okay, got it. So that is the alternate market news for everybody. So take note itself regarding with what I'm saying about inflation, and also take note of what I believe the Cathie Wood shares will be hit once again. All right, the bull goes moo, the bear goes grrr, and the lemming go is different this time. Now let's take a look at the market right now. Everybody, get ready. Okay, first of all, the China market is doing quite well. We have the Winter Olympic going on right now, and I did say this, if the Winter Olympic is actually ongoing, likely China market won't be going down. And I'm not half surprised if you see it going up. And indeed, this morning, the China market actually get up instead. Went down initially, but very fast recover. And now it's trading at 15,077 above my 61.8. So if let's say it continue, it has to break the MA first. The MA itself for today, let's take a look, yeah. Okay. The level to watch out for today is about approximately 15,153. 15153. Okay, 15153. Write it down somewhere. Oops. Okay, 15153. Okay, what write it down somewhere. So this is going to be important, yeah. Okay, so what if the market, the Shanghai index go past 15153? Then what will happen? Then of course it will go all the way here itself, which is 15512 potentially. All right. But of course, on the flip side, if the market touches the 15153 and doesn't go any higher, then sorry, that will be again another round of selling. Because the last few times when I tell you guys this will happen, you can see every time it touches it, the market will actually come off. All right, so I'm not going to be half surprised this will happen as long as they don't settle the problem internally in China. All right. Okay, so that is Shanghai, the China A50. Let's look at the other market today right now. Okay. First of all, US stock market. Let's take a look at US stock market. Give me a moment. There's some technical issue here. The Wi-Fi is not fast enough. Okay, here we go. Okay, for Dow Jones this morning, we have some selling in the start of the day. Now, what happened? Now, you notice that the Dow Jones is below the MA 200, 35306, is below the MA 200, 35207. And it's even below MLP, which is 35149. So that means that today, as long as the market stays below OP, it will be a sell because the three of them, the two terrains and the MLP, shows that it could go lower. So that's why this morning you can see that the market for the Dow came down instantly, but the downside will be limited. Why? Because the KSI jump came in. The KSI jump came in means that, right, the market will not be closing near the low. That's why the market sees some resistance, support itself recover. Let's take a look at the 15-minute chart to enjoy this. So you can see on the chart right now that the market opens immediately in the morning. It went all the way down, all right? So there was simply selling all the way in. But now it's in a former base and it's recovered above KTR +1. So now it's still moving higher at 35,065. So there is a possibility for this market to go back to OP level. And again, it's going to stress out everybody. But of course, if the market fails and to come back down again, then of course the selling can be really drastic later. Yeah. So we watch the market closer. But the moment now, three levels are all against you. So kind of tough to make a call right now. Yeah. Okay. All right. So how about NASDAQ? Okay, NASDAQ has been a CCYR on the day chart. All right, it's the second day in a row. So it's below MA 200, MA 30, and it's now trying itself to, to break above the MLP at 14724. Okay, 14724. If it breaks above, then of course there is a chance that you can help to, bring out all of these 2 points here. But if the market fail, then of course the thing is still the next level. You may see down will be about 14,411 level. Okay, so watch out for that for the NASDAQ. Yeah. Now for NASDAQ, the KSI is red, and this is not good. So I suspect that NASDAQ may go into some profit taking later, especially when the European market opens. Yeah. Okay. All right, so that is NASDAQ. Let's look at S&P 500. Now S&P 500 today is below the MLP, below the MA30, below the MA200. So everything is below, but it's very near to the opening price. So pretty cool is that if the market recover above opening price, it will have to go back up again to this point itself to, for upside delivery, right? On the downside itself, it goes down, then the downside could be as low as 44.57.8, and that is actually the low of is actually the level of the pivot 1 today. Okay, so traders, if you think that it's going to go higher, then you can aim for 45.40. If you're thinking it's going lower, then you can aim at 44.57. Yeah, so this is quite a big range here, so traders to know that. 1 minute, there's some technical again error coming on. Okay, I'll leave it there first. Come back to that later. Okay, let's look at other markets. We look at the Hang Seng. Now, Hang Seng yesterday or the day on before Friday was a CCRY, so it should be a buy up level. Now, the only thing that is interesting is that we have a bit of split cam between the parents, the high and low. Now, the upside itself, MA200 is at 24,988, but the MA30 is at 24,083. So what does it mean? That means that, right, the overall trend or overall movement itself is still going up. That's why the MA30 is actually at this 24,083. But the pivot 1 is actually coincide with the MA200 at 24,988. So what do I see from here itself, right, for Hang Seng is that the KSI is also red in color. All right, so I will say my analysis. I believe that today for Hong Kong, okay, because the MA30 is actually at the bottom, right? So most likely, if the Hong Kong market goes down to KTR -1 to -2, watch out for it. The market may rebound over there. All right, and if let's say it goes up itself, right? Okay, if it goes up, right, of course it can expecting to cross 24,667, and then obviously do this. So with all these things here itself, right, all my view is this. To me itself, for Hong Kong market, we should able to see a what you call a choppy movement, because it's neither here or there. All right, and of course, if the European market is to lead, then you'll follow. Okay, but today itself, it will be sideways, right, because of the two MAs, and one is pulling and one is pushing. Okay, so there's something to think note of that. Okay. Now Nikkei is now flickering between the yellow and red. Okay, you can see it's flickering right now. Now Nikkei actually overall it looks okay. The MA is actually higher. The MA30 is also higher, and now the market is actually below MLP. So basically, for this Nikkei, it's below MA30, MA200, and also below MLP. Right at the moment, right now, slightly below. So to me, is that if Nikkei cannot find any strength and loses the pivot 2, we will see the Nikkei coming off. And now, if you look this itself, right, over the last few days, there were a lot of people, on the buy side, but now it seemingly is no longer there. And of course, the sellers who are actually selling will be waiting for this to come. Okay. All right, so watch out for it, Nikkei. Now for DAX, I already tell you DAX will come down on the Friday morning. And indeed, wow, look at DAX. It came down all the way. I think that day is down by quite a fair bit, right? Okay, so what happened is actually the reason was because it was below MA30 and below MA200 and also below MLP. So again, the same thing repeated. When the three of them are against you, very rare the market will be in your favor. So truth be told, when the market break below the MLP at 15,417, straight away the market got, okay, the downside came in ready today. Yeah, once it loses the MLP, the selling immediately came in. That's why it's so important to know the terrain well enough. Okay, so the terrain is negative, the MLP is there, couldn't stay support, that's why the market sell down. All right, all clear on this? All right, that is the DAX market. Going forward for today, I'll update you later when the new lines are. Now, crude oil continued to rise. It hit the high of about 91.76. Okay. Seriously, it's all right. It's getting nearer and nearer to my next target itself. It will be next target will be 92.8. Okay, 92.8 itself. Okay. Now, crude oil really has the ability to go to 92.8 because of the current Ukraine Russia issue. So I kind of believe that and look at it. The boys have been buying. Look at it. Now, traditional indicator will ask you to sell crude oil a long time ago, but not for us. You can see for the last few months, the KSI has been green all the way. That means that the buyers are relentless. And of course, we have seen that the last few days, the buying is also climbing in. So to me, it's all right. Buying crude oil is like buying insurance. I believe that if anything happens, crude oil will be the one of the faster market to move up. Yeah. Okay. Okay, so I'm done with all the indices. Let's look at the gold and silver market. Now, gold and silver, let's take a look. Now, gold and silver, gold itself is trying to cross above the BNB RL so that it can go to the 1827 target. Okay, now the thing is this, we mentioned that 1814 is a very, very strong figure, and 1814 basically itself will be the first target. But after 1814 cross, the next one is a chocolate bar right here, and that's 1819. Well, now 1819 is still need. All right, so if the gold price goes up, 1819 will be next. Okay, 1819 will be next. If the downside do happen, then of course the downside will bring it down to 30 to 1778 level. Okay, 1778 level. Okay, all right, so watch out for these numbers, 1819 and 1778. Okay, so that is gold. Let's look at silver. Sorry, it's Ethereum, my bad. Okay, for this silver, it has bottomed out nicely. It misses my 1.1, minus 1.1 by a few cents, and then it went up. Okay, so of course I did say that if gold goes up, silver will move together. Now today silver is a doji directional day, and silver is trying its best to stay above the BNB SL level. So of course if it goes higher, then you can try on it. Okay, now for me it's all right. I don't think silver will go up that much, and it's pure speculation. At the moment now, silver is below MA 200 and below MA 30. So the only thing that's supporting it is MLP. So even though the market could go up itself, I kind of suspect that the market may only reach here, right? $23.02 for silver. Now it's at $22.78. Quite a bit of money already. Okay. All right, I'm done gold, I've done silver. Okay, now what do we do next itself? The last two will be Bitcoin and Ethereum before we end today's MAO. Now for Bitcoin, you can see that it's staggering upwards itself, a very strong stagger. It actually crossed the BNB rather fast. Okay, and then now today's a doji directional day. That means that there is a chance to see the market going all the way up or all the way down. Okay, right. So for this, if the Bitcoin strategy is going on, the momentum is going on, 42,993 is very highly possible. And the high now is 42,917. Okay, that one took how long? All right, for the market itself, let's take a look. So 42,933 will be next. And of course, the middle 43,282, and the highest number is 43,759. Yeah. Okay. All right. So for me, I'm not that keen to chase other crypto right now because the KSI is red and there's no blue bar, so it's a mixed bag here. So I think that I'd rather stay firm by watching the market. All right. If I want to do anything itself, I'd rather try to sell from top down instead. Okay. To buy up right now is all right. It does carry some risk. Okay, last slide before we end today's MAO. 1 minute, just bear with me. Today it's not easy. The technical side is a bit cranky. Now, Ethereum, let's take a look. Ethereum. Now, Ethereum, ever since it bottomed out in this January, you can see that the color change over here and the KSI jump over here, even though there was some student, but it's fine. And after that, from there, itself, Ethereum sort of search right all the way, and now it's maybe going up again. So Ethereum is still below in the trend, is still at 36.24 is the highest level, but the momentum is pretty good. The momentum is pretty good. So that is pushing up the Ethereum higher. MLP is 33,005. And of course, again, the Ethereum players are pushing it up itself. So the first level it may have to go will be here, and that's 31,111. Now, the thing is this, for the upside itself to anything higher, let's say to even here, that will take a lot of strength to push it up, which I don't think so. It will happen actually with the interest rate environment ongoing right now. Yep. Okay. So basically, in short itself, for today, most likely majority of the market could be going higher. I can see that the US Dow Jones now was down by about 150 points and recovered now. NASDAQ also. So there are still pretty strong buyers in the market, and we just have to wait for a while for a turn. But of course, I'll say if the CPI data really come out lesser than expected itself, right? It will be good for the market. If we go higher than expected itself, right, then of course the market will shake a little bit. Yeah. All right, that will be all for today's MAO. Hopefully you guys enjoy it. Right, the market alternate news itself is what came from many different sources. For me, is I collect them and basically prepare. So I went through 3 installments of it, and it shows very clearly that the market itself is kind of like pretty jittery right now. And anytime any negative news may bring the market down. All right, that'll be all for today. Thank you very much. Have a great day. This is Kel signing off.